We are entering a tricky period in the markets here. We're already seeing it. It's not as easy to just close your eyes and go long. I want you guys to be up on point. And by the way, there's plenty of longs out there. There's plenty of bull markets, but you also have to be aware that bull markets don't last forever. I want to first dive in with what I'm going to call Macro Monday. And we're going to look at some various macro charts that kind of put a good framework on everything that's going in. Now, remember, last week we saw some interesting action. My biggest takeaway was that semiconductors started to stutter. We started to see stocks like NVIDIA roll over. We'll take a look at that chart. Where is the target on that? Because it actually is getting close to a potential bounce level. Now, bounces do not mean long-term investments. Make sure you understand that. But bounces can be very lucrative if you buy at the right technical support and you don't get too greedy. Crypto, again, as dead as can be, but it's still in this range. And the key to Bitcoin, guys, is that here's your resistance, here's your support. If the support breaks, watch out.
Hello and welcome to Money Talks. In this video, we'll dive deep into the captivating world of the crypto market and uncover the latest news in Bitcoin and stocks. Get ready to stay informed and make smarter financial decisions. Now, let's begin our enlightening discussion with Gareth Soloway.
All right, I do want to cover Bitcoin and crypto real quick. Here's your weekly chart. Let's go to your daily chart. Crypto, again, as dead as can be, but it's still in this range. And the key to Bitcoin, guys, is that here's your resistance, here's your support. If the support breaks, watch out. Then things get very messy very quickly. If this area breaks and we stay above it, and again, this here, it broke and it reversed. So you really want to see a couple days above it. If that happens, this thing's off to the races. Bitcoin volume right now is so low that I do worry that it's setting up for a huge move. The volatility and disinterest in crypto right now, especially Bitcoin with the lack of volatility, is massive right now. Just people not caring. Such tiny volume. What that does is it makes vulnerable very big swings in charts. So be ready that if you do crack this, there's going to be a lot of stops and a lot of people shorting, and it could flush. I mean, you could flush literally, you could dump here and you could go to 25,000 in a split second, right through it. That would not surprise me. On the upside, by the way, if you break out, you could go to 30, 35, 36,000 very, very quickly. This is US CPI year over year in orange from 2013 to 2023. So basically the last 10 years. This blue line is CPI year over year from 1966 to 82. And the reason why I want to look at this is because it talks a little bit about what we could see in the future. If we are replicating the inflation from the 70s and 80s, then this could be our future. And what we see here is that both lines track each other. So the 2013 over the last 10 years in orange tracks almost identically the 1966 trend line here, which is the CPI for those years in basically the 66 to 76 area. Now, what's interesting here is look at the pop, look at the drop, and then look at where we see inflation continuing into the late 70s, into the 80s before it collapses down into 82. And the reason why I bring this to your attention is because everyone is so 100% sure that inflation is going back in this box. You know, even with CPI data recently upticking a little bit, we saw PPI data upticking a little bit. Everyone is still saying, hey, listen, we're convinced it's going to go back to 2%. The Fed will be able to cut rates very easily next year. There's going to be no issues whatsoever. If this tracks, and again, you can't deny the relative nature of both trend lines tracking, then what we're going to see is we're going to see inflation come down a little bit more and then start to pop again. And what's fascinating about this is this could tell us the future of the stock market and the economy. Think about this. Imagine if we see the economy stutter late this year into next year. Inflation's at around 2.5 to 3%, which would be right down in this area relative to where we are now. Now, the economy starts to struggle. Unemployment starts to go up. What happens if the Fed has to lower interest rates when we're at 2.5 to 3% on the inflation rate, right, or the CPI rate? Imagine what that triggers. Could it trigger this next wave to the upside in inflation that takes us even above the previous pivot high. So the previous pivot high for us, we know, was around 9%. What we're curious here is, does something in the economy, does a black swan event, does the economy just start to stall out because of the lag in interest rate policies that then causes this to jack up before eventually it comes crashing down? So that was one of the things I wanted to show you guys real quick. This is another interesting one. This goes more into the banking sector and just looking at this commercial real estate loans by bank size. And what's scary about this, folks, is that we know that the big banks, right, the JP Morgans, the Citigroups, the Bank of Americas, they actually have relatively lower exposure to commercial real estate. But it's the small banks, this is the trouble. And what we already saw with Silicon Valley Bank failing and some of these other banks, that they, again, even though it wasn't necessarily the reason those banks failed at this point, these smaller regional banks have absolutely an insane $1.9 trillion in commercial loans. And we know that the commercial real estate is already in tatters, essentially. So this is going to be a lot of dead weight on the small banks. And what I would say is you have to expect more bank failures over the next basically 1 to 2 years. This is all going to implode. Now, interestingly enough, this sets us up where the big banks are going to be fine. All right, I don't think the big banks have any trouble here. The negative for us as citizens is that what this is going to do is it's going to consolidate power from the small banks. That gives us diversification, that makes it a non-monopolistic situation in the banking sector. It basically is going to mean these banks up here start to go away, and you see more and more wealth in the large banks. I mean, they're already too big to fail. They're going to basically become mega players that are not only too big to fail, but they can probably call the shots at that point because the economy will be totally based on their survival. All right, gold, guys. Gold continues to move back here. We are down ticking on gold. A little bit of consolidation here. The key for me is this trend line. This is that longer-term trend line I've been talking about, folks. So again, we want to continue to follow that one. Beautiful down-sloping trend line. We hit it here, bounced. If we come back in, it's right around 1880, 1875. This is an area of support. I have been accumulating gold now ever since we've been kind of consolidating back down here a little bit. I likely will accumulate more today because I do think that, again, as things get later in the year, you're going to get a big move on gold and a breakout on gold. So watch for that very, very carefully. My point is this. We are entering a tricky period in the markets here. We're already seeing it. It's not as easy to just close your eyes and go long. I want you guys to be up on point. And by the way, there's plenty of longs out there. There's plenty of bull markets, but you also have to be aware that bull markets don't last forever.
Don't forget to join us as we explore the unfolding events. BTC price breakout by the end of August. Important things should know in Bitcoin this week. Then we turn back to Gareth Soloway. Bitcoin maintains an enigmatic calm after its weekly close, leaving traders guessing about an impending breakout. The coin's price hovers near $29,382, portraying a classic August trading scene of subdued volatility. Despite exchanges hosting a tug-of-war between bulls and bears, neither side can dictate a new trend, creating mounting frustration. With few macroeconomic triggers ahead, the focus shifts to accumulating whales, indicating a potential major breakout. The Bollinger Bands metric and historical data echo this sentiment. Bitcoin's low volatility suggests an imminent substantial move, leaving the community eagerly awaiting the storm. Amidst this, the Federal Reserve's minutes may impact the crypto market, hinting at potential rate changes. As BTC charts remain quiet, market participants brace for the inevitable storm that might follow. And that concludes an insightful episode of Money Talks. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing!